everyone, my name is Jack. Welcome back to the channel. I cover a variety of topics as they relate to investing and personal finance, so if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. But this is another episode of my M1 Finance tutorial series where I'm going over the major features, benefits, and drawbacks of this platform, M1 Finance. Full disclosure, I am an affiliate of M1 Finance, so if you end up using my link in the description below and you end up funding your account, I might receive a small commission, which would help out the channel a lot, and hopefully you'd get a great brokerage out of it as well. If you want to see a full playlist of my other M1 Finance tutorials that I'm doing right now, definitely check out the playlist in the description below or at the very end of this video. But in this episode, I want to talk about one of the best features of M1 Finance, certainly one of the most powerful, and that is M1 Borrow. M1 Borrow is M1 Finance's margin loan option, where you can actually take out debt against your portfolio, right now at 2% interest if you use M1 Plus, and that's their premium subscription, M1 Plus. It's $120 per year, and that lowers your interest rate down from 3.5% to 2%. So if you have a lot of money in the platform, that can be some pretty significant savings, making that premium subscription very much worth it. So definitely worth looking into. But for those of you who don't know what margin loans are, margin is debt against a stock portfolio. It's something that M1 Finance or whatever brokerage it is would issue debt using your portfolio as collateral. So it doesn't actually require a credit check or anything like that, since all they're doing is lending against your stocks and bonds and whatever's in your portfolio. And then if you can't pay it back for some reason, then they have your stock portfolio there as collateral, so they don't really care about your income history or anything like that. Whereas a lender lending against a home, for example, is going to worry about your income history, is going to do a lot of research there. But here, you're giving your collateral to them up front, and they could take it from you very easily since they're a brokerage. Margin is great for flexibility in that you can use it to buy more stocks, you can use it to buy something outside of your stock portfolio, you can use it to refinance other debt in a way. So it adds a lot of flexibility to your portfolio since you don't actually have to sell the holdings within it to get the cash out of it using the margin loan. Of course, it cuts both ways. Whenever you add debt to any equation, it's going to make it higher risk because there's a chance that something happens. The stock portfolio goes down, and this is what could trigger a margin call. This is perhaps the death knell of any person who uses margin. If you get a margin call, that is where the brokerage will automatically sell your holdings in order to pay back the margin. So there is a big risk there. If your stock portfolio goes down, you no longer have the necessary collateral, and if you don't pay new money into the account, they're going to use your collateral and sell it to cover the margin position. So it can open up an investor to a lot of risk if you don't use it properly. So you got to be very careful and make sure that you're only using margin when you know what you're doing with it, you've done your research, and you understand the risks associated with it. M1 Finance specifically allows you to borrow up to 35% of your portfolio once you reach an account balance of $10,000. So you got to have $10,000 in the account before you can start doing this. That is a little bit more conservative than some other brokerages like Robinhood, which I think lets you use it right off the bat if you use their premium account, and their interest rate is a little bit higher at 2.5% interest rate now, and I believe they let you leverage up to 100% of your portfolio value if you want to go really, really high risk. That's not the case here on M1, but the interest rate is lower if you use M1 Plus, since it's only 2% as opposed to the 2.5% that Robinhood just recently rolled out. And like I said, a big reason that many investors choose to use margin at all is because you don't have to sell your stocks and bonds in order to get the money out. So if you have some purchase that you want to make, for example, in my case, if I have a real estate purchase that's coming up for an investment property and I want to make a cash offer, but I don't necessarily have all liquid cash right now, I could use my M1 Finance margin loan to take out some cash there and use that for down payment or make a cash offer, whatever it is, fix up the property, do whatever to it, refinance that property, take the money back out of it, and then use it to pay back the margin. That's just one example of what you can do with it. You can use it to invest in more stocks. It just gives you more flexibility since you don't trigger a taxable event by selling your stocks. You are just pulling out money from a loan, and that's a big reason really investors use any debt at all, is that it generally is not a taxable event. It is debt, and you're going to have to pay it back, of course, but you don't have to sell your securities in the meantime, which would generally trigger something taxable. Of course, talk to a tax specialist if you're unsure about any of that, but that's generally the case. And another thing that margin can do is it can increase your returns if your investment goes up, since you're using someone else's money, but you get to keep all the returns, so you're leveraging your investment in that way. But of course, that comes with downside risk too. If the investment goes down, you still have to pay back that debt, so you got to be very careful when you're using debt to invest in any situation. So let's see what an M1 Borrow loan would actually look like. I do have two accounts here. One of them does have a little bit of margin because I actually used it to make a purchase recently, and I didn't have cash in the account, and I wanted to take advantage of a particular price on a stock in case it went back up while I had that buying window. So rather than wait for the cash to arrive, I just used my M1 margin loan to move the money there into the account, make the purchase, and now I'm paying it off with the cash that I had elsewhere. So that is another thing that's helpful. You have the money there ready to go in a way if you aren't using your margin for something else. But you can see here it tells you how much of your collateral is still good. So if my stock portfolio were to go down a bunch, then this number would go down too, and it would start warning me if I was getting close to a margin call or something like that, or tell me that I need to put more cash in the account or pay down the debt or something like that. So that's nice. And then you can see up here, it shows that I'm only using about 4% of my credit limit right now. But a nice thing about M1 Borrow is there's no payment schedule. All I have to do is meet the interest payments, much like a credit card. It's not like it's a 30-year mortgage where I have to make a fixed payment every single month. It doesn't matter what month it is. I'm making that payment and paying down principal, even if I don't want to or there's some opportunity elsewhere. All I have to do here is pay the minimum interest that was actually charged that month. Again, just like a credit card. So there's no actual schedule to pay it back. You just have to keep meeting those interest payments, again, which is great for keeping things flexible if you're trying to make financial moves elsewhere using the margin loan to leverage that opportunity. But that's pretty much it. Again, when you're using any sort of margin loan, it does add risk to the situation. So you want to be very careful that you understand the risks associated with it and that you're not doing anything too reckless. And if you are doing something reckless, at least you know it is reckless. Since if you don't know it's reckless, that's when you can get into some real trouble. But that's M1 Borrow. If you like this video, please like it since it would help the channel out a lot. And if you want to see any of my other tutorials about M1 Finance, all of its features, benefits, and drawbacks, then definitely check out the playlist in the description below or the playlist at the end of this video, since I have other tutorial videos going over different things on M1 Finance. But if you're interested in the platform, you don't care about anything else that I have to say, you can check it out for yourself by going down to my affiliate link in the description below. You can open up a free account there, and there's no minimum deposits or anything like that, so you can play around with the platform and see if you like it for yourself. And if you end up funding that account again, I might get a small commission, which would be great, and I would appreciate that very much. Be sure to subscribe if you like this sort of content about investing. I also cover a lot of real estate investing content too, in addition to stocks. If you like that sort of content, definitely subscribe since I put out new videos every single week. But until next time, take care.